Okay, so a very good evening, everyone. Hi, Gary. How are you doing?
Fine. Glad to see you.
Sorry, I had some connectivity issues at my end, so just joined from my laptop. So sorry for this. Okay, so guys, a very good evening and a very warm welcome to everyone to this very interesting and very relevant session on digital finance transformation. So, we are actually very glad to inform, everyone that, we have, recently commenced or launched a program with IIM Lucknow, on the same topic, which is, digital finance transformation. So this is an executive program, talking about how the finance function is evolving, how there are transformation in the finance function and multiple pieces, right? We break down the finance function into, let's say, FP&A. We talk about the various finance processes, including an R2R, O2C, P2P, how those pillars. We talk about profitability analytics. We talk about how do you use data analytics and data visualization across the finance and accounting value chain. So multiple pieces, on that program. And what I'm going to do is I'm actually going to be talking about that program as we go through the session. But before that, we have Gary Cokins here with us. So Gary is a thought leader in finance. He's an old friend. Gary has traveled extensively across India many years back in the pre-COVID era. And glad to see Gary, and I think all of you would love to hear his insights about finance transformation. I know one of Gary's favorite topics is he talks about analytics based enterprise performance management. So that's one thing that Gary always talks about. But of course, today I think Gary is going to give you a good overall perspective around the digital transformation in finance. So Gary has written many books. He's a big guy. So thank you, Gary, for joining us early morning your time. So guys, before we get going, the agenda for the session is Gary is going to take you through a lot of slides in a lot of information around digital transformation in finance, and after that I will give you an overview of the program that we have launched out with IIM Lucknow. We have the first cohort which starts early September. So this is an opportunity for a lot of Miles alumni, for a lot of senior professionals who are working on finance transformation projects, or for those who intend to sort of upskill themselves and get ready for the future of finance. So I think, Gary, over to you, and really looking forward to your session.
Okay. Can you see my landing slide?
Yes, Gary. Yes. If you can do a full screen now. So
full screen. All right.
Perfect.
Great.
Perfect.
There we go. All right. Well, thanks again for inviting me. And I'm really looking forward to being one of the many instructors for the IIM Lucknow courses. The courses that I will be teaching are really going to be corporate performance management and enterprise performance management. And there's a lot of confusion about what that is as a process, as a system. It's actually the integration of multiple methods, including profitability reporting, including below the product gross profit margin line, to include distribution channel, marketing, selling. In other words, a P&L by customer, driver-based budgeting and rolling financial forecast, enterprise risk management, process improvement like lean management, Six Sigma, balanced scorecard, strategy map, Kpis, all these moving parts. They're like gears in a machine. I call my session like an MBA in one day rather than 2 years. But for this session, I'm going to focus in on transformation, primarily dwelling on analytics. Before I go, maybe some of the people don't really know who I am, so let me give a little background about myself. I'd got my business degree in industrial engineering and operations research from Cornell University in 1970. MBA from Northwestern's Kellogg School of Management in 74. So if you're doing the math, I'm 73 years old. but I feel like I'm 43 years old. I have been to India several times, including road shows with Varun, Bangalore, Mumbai, Hyderabad, Delhi. It's always fun to go to India. My 40-year career began with about a decade with a large conglomerate in the United States, FMC Corporation. I was a division controller, then 30 years consulting with Deloitte, KPMG, Electronic Data Systems, that's now part of Hewlett Packard. And then up to 8 years ago, I was 16 years with SAS. Maybe you don't recognize who's SAS, but SAS is actually the world's largest privately owned software vendor, 15,000 employees specializing in analytics, and they have offices in India. The reason the books are there, partly, I think careers have a lot to do with luck and circumstances. I had a lucky break. In 1988, KPMG struck an exclusive contract with Harvard Business School professor Robert S. Kaplan, and many recognize his name from the balanced scorecard, but he did the pioneering work in activity-based costing. I got recruited to KPMG from Deloitte. For 5 years, I implemented activity-based costing. I wrote a book that led to other books. You don't need to purchase my books. If you go to wiley.com, chapter 1 is typically a free download. That's really all you need. Okay, so let's get going. I'm probably going to go for maybe 30 minutes here. Who will benefit from this presentation? Managers who have previously struggled at promoting digital finance transformation. This includes financial planning and analysis, corporate performance management methods, as I just described, and integrating business analytics into their decision support systems. I want to be clear, this presentation does not dwell on the obvious finance transformation from, on-premises business software to cloud-based software. I'm not going to talk about cryptocurrencies or Bitcoin or any of that stuff. I mean, we're really going to talk about analytics. And the other people who will benefit is those who intend to champion any or all corporate performance management and business analytic improvement techniques, and they need a compelling call to action. And the reason I have champion in quotation marks is because it's been my observation that although it's nice for senior executives to basically advocate and sponsor innovation and new ideas, often they are preoccupied with firefighting and short-term priorities. So it's typically managers 1, 2, 3, 4 levels down in the organization chart who have passion and ask themselves, how long do I want our organization to continue to perpetuate using stale or arcane methods or not use methods like analytics at all? So if you are 3 or 4 levels down in the org chart, that's fine. I like presenting to you. So quickly, what I'm going to cover in this 30 minutes, I'm going to give an overview of the stages of maturity of analytics. Why is business analytics even needed? A little definition, what is it? I'm going to give a couple of examples of business analytics that's pervasive, and then I'm going to give a couple of specific ones for the accounting and finance area. Just going to briefly mention the digital revolution. That's about artificial intelligence, robotic process automation, and then I'll sum it. So put your seatbelts on. I'm going to go pretty fast. So here's the continuum of analytics. We start with the historical view, looking backwards, like through the rearview mirror of a car, descriptive, pie charts, histograms. Then we move on to diagnostic. Notice there's that black dot. That's an outlier. So we want to basically drill down and say, well, why is that strange invoice or purchase order so unusual? Then we go through the windshield, the future view. We start with predictive analytics. And you may have noticed one of my books was Predictive Business Analytics. I did write it many years ago. But at that point, I thought, well, that's Mount Everest. That's as high as you could go. And then the new kid on the block, prescriptive analytics, which is primarily optimization, of all the choices you could basically plan with predictive, what's the best choice? So why is business analytics even needed? Well, let's put our MBA hats on. How does an organization gain a competitive edge? Well, one way could be being first to market via innovation. A good example would be Apple, iPods and so forth. Another would be customer loyalty. In the United States, a jewelry manufacturer, Tiffany's, has a loyal base. Or by being the low cost or low price provider. In the United States, that would be Walmart. In Europe, other ones. My question is, how sustainable are these in the long term. And so what I want to refer to now is some of the great work from Professor Michael Porter, who's so famous for all of his work on strategy. Some of you may have heard about the 5 forces. And he basically advocates there are 3 generic strategies, and I'll define each of them next: cost leadership, differentiation, and focus. And so isn't competition ultimately about these 3 things? Well, let's define them. Cost leadership strategy is accomplished via improving process efficiencies, unique access to low-cost inputs, vertical integration, avoiding certain types of cost. The differentiation strategy is accomplished via developing products and or services with unique traits and characteristics valued by customers. And the focus strategy is accomplished via concentrating on a narrow segment within entrenched customer loyalty. But my question is, don't each of these commonly accepted 3 generic strategies have risks today? And the answer is they are, because they're vulnerable. Generic strategies are vulnerable. Why? Let's start with the cost leadership strategy. Other firms can lower their costs. Unlike many years ago, it may take them 3-4 years to lower their costs. Today, with techniques like lean management, agile, they can basically lower their costs, maybe in 6 months or even 3 months. Next, differentiation strategy, imitation by competitors, changes in customer taste. When Apple came out with the iPhone, it was revolutionary. But within a few weeks, Samsung and other manufacturers also had mobile phones. So they can basically invade the space. Focus strategy, broad market cost leaders or micro-segmenters invade and erode your customers' loyalty. What's a good example? Amazon. Amazon started many years ago with just a website with book publishing. Then they kind of moved on, kind of like a catalog in a department store, washing machines and clothing lines. Now they're actually invading the television networks with streaming. So, my belief is, since the 3 generic strategies are vulnerable, then the best defense is agility with quicker and smarter decision-making using statistics, analytics, and operations research. So let's talk about analytics. Well, there is confusion and lack of consensus about what is business analytics. Is it a data warehouse? Is it data mining with drill down and reporting, like using tools like Click, Tableau, Microsoft BI, even SaaS tools, to basically see, an outlier, an unusual charge to an invoice for purchase order? Is it business intelligence with enhancements? And in a few minutes, I'm going to describe how business analytics is a stage above business intelligence. Business intelligence has been around for over a decade. Is it about data governance, data management, data quality? That's really the job of the IT department. Is it about probabilities and statistics like regression and correlation analysis, forecasting, optimization equations? I'll talk about those in a few minutes. Or is it all the above and even more? Well, one way to think about business analytics is using this grid. The vertical axis is the ability to know something from unknown to known. The horizontal axis is the ability to control something from uncontrollable to controllable. The more you use business analytics, notice what happens. The grid, the square in the upper right, expands. So not only can you basically know more, but you can control more. So the convergence of data and technology is creating career opportunities in data science that can be leveraged by accountants to increase their efficiency, improve their effectiveness. And again, during my sessions in the IIM Lucknow courses, I will be doing a full 2 hours on this one and then many other hours on the other corporate performance management methods. Now, regarding a definition, I could have put a definition here from Wikipedia or from some of the more popular books on analytics. One book, I probably should have put it in here, the really breakthrough book was authored by Professor Tom Davenport. You may want to write this down and then Google it. The title of the book is Competing on Analytics. Competing on Analytics. Good definition there. But my belief is to oversimplify this, just work backwards with the end in mind. Know an opportunity or problem where analytics can solve it. And there should be no argument what's the purpose of analytics: better decisions and better actions. Analytics goals should be to gain insights and foresight. That's the future view, and to solve problems, to make better and quicker decisions with more accurate and fact-based data, and then to take actions based on what you see. It is the use of internal and external data. And when I say external data, I mean like scraping the web, Google searches, all with the intent to provide a competitive advantage to an organization. Now, I want to differentiate BI, business intelligence, for business analytics. And I kind of like to use this funny phrase: there is no intelligence in business intelligence. That's sort of being critical of business intelligence, but there's a reason that some people criticize business intelligence. Here's the differences. Business intelligence is about query, drill downs, and reporting. But in contrast, what business analytics is about is investigation and discovery. So to distinguish them, what business intelligence does is it consumes stored information and displays it, like pie charts, histograms. What business analytics does is it produces new information from that stored information and anything that's surfaced from the business intelligence tools. And then the corporate performance management methods, what they'll do is they'll deploy analytics in the context of a method. And in a few minutes, I'm going to give an example of one of the methods of CPM deploying it. Now, insights and actions. Queries answer questions. Business intelligence creates questions, but then analytics then stimulates more complex and more interesting questions. And most importantly, business analytics also has the power to answer the questions. And I'm going to get a little serious here, although some of you may think, Gary, you sound like you are serious. No, I'm a pretty funny guy. I'm not as funny as Varun Jain, but I can be funny. I believe in the past, the best executives and the best leaders had the best answers. Today, I do not think that's the case. Today, I think the best executives and best leaders have the best questions. There's too much complexity. There's too much uncertainty. There's too much volatility for those executives and leaders to rely on their intuition or gut feel, or the types of answers they had earlier in their career that got them, promoted to the high-level positions they're in. They need to create a culture for discovery and investigations. So I'm going to put my professor's hat on real quick, a little bit of definitions of statistical terms. We'll start with the descriptive view, through the rear view mirror, and then I'll move on to the predictive view through the windshield. So in the descriptive view, we've got distribution curves, bell shape, mean, median, standard deviations. Everyone's sort of familiar with, the bell shape, or it could be skewed to the left or skewed to the right. Correlation, there we have dependency relationships among variables. So you look at certain data and then you say, well, basically, what is the output that's influenced by that? Segmentation, dividing groups into subgroups or subgroups. Why do I say that? The marketing function, they're really way ahead of accountants in terms of applying analytics. They've been doing it for decades. And then what the marketing people do for a company is they'll segment their customers, not just the old, young, male, female, gender. They may have 10, 15, if you will, segments. Cluster analysis, grouping objects that are more similar than other objects. An example of cluster analysis. Let's say you go to your customer master file and you say, oh, here's a group of customers that bought from us products A, B, and C. But here's another group that's very similar to that group, but they've only bought A and B. They haven't purchased C. Well, let's do a marketing campaign or give them price discounts, coupons, offers, deals, so they'll buy C. Now, in the predictive view, we have hypothesis testing. PhD students, that are getting their PhD have to do a hypothesis, that in their thesis to prove or disprove what they're thinking. And then regression, forecasting dependent variables from independent ones. That's the whole predicting view. Now, I want to have a message here that correlation is not necessarily causation. So this may surprise you. What these two graphs show is on the left is the number of people who have drowned by falling into a swimming pool year by year from 1999 to to 2009. Okay, this is a historical information. On the right side is the number of films that the famous cinema actor Nicolas Cage appeared in. Look how similar these graphs are. They're like following each other. But that doesn't mean each time Nicolas Cage basically has more or fewer movies that more or fewer people drown in swimming pools. It's just coincidental. So correlation is not causation. So let me contrast now business intelligence from business analytics. Business intelligence, again, this is really the old way, starts with standard reports and then ad hoc reports. Then we've got that query drill down. The acronym OLAP stands for Online Analytical Processing, and then maybe alerts, upper bound, lower bound, thresholds. But what business intelligence does is it takes it to a higher level. We start with the statistical analysis, regression, correlation, clustering. I know that some of you took those courses at the college and university, and you just wanted a passing grade and get out of there. Well, sorry, it's here. But the good news is you don't need to go to your attic or basement or wherever your old textbooks are, and brush them off. But you do need skill sets in your organization that have these skills. And then we move on to forecasting, and then predictive modeling, and then ultimately Mount Everest optimization, the highest you can go. Now, some of you may be asking, what's the difference between forecasting and predictive modeling? Well, I'm glad you asked me that. Let me tell you the difference. Forecasts tell you how many ice cream cones will be sold in July, so you can set expectations for planned costs, profits, supply chain impacts, and other considerations. But predictive models tell you the characteristics of ideal ice cream customers and the types of flavors they will choose, like vanilla or chocolate, and the coupons offers that will entice them to purchase more. So if your goal is to do a better job of buying the raw materials for the ice cream factory and to have them at the factory at the right time, right place, your company needs a forecasting solution. This is traditional, production and inventory control stuff. Industrial engineers do that. Remember, that was my degree. But if the marketing department is trying to figure out how, where, and which most attractive customers to market the ice cream, it needs predictive modeling. So I wanted to give an example of how you go from data to business intelligence reporting to models and predictions. And I'm going to contrast a website on weather forecast, the AccuWeather.com, versus a business like you are in. So let's start with the weather. They have data collection, sensors for temperature, humidity, wind speed, and so forth. They have current conditions. If you watch the evening news, what is the temperature? What's the wind going to be? And they have future prediction capability, weather models with partial differential equations. You in India, you don't see what we see here in the United States. When those hurricanes begin in Africa across the Atlantic Ocean, they will have these, if you will, these graphs that have these kind of expanding cones. Where is that hurricane going to land? Is it going to be in Florida? Is it going to be up in North Carolina, where I live now? I am a native of Chicago, but businesses have similarities. We've got data collection. We've got sensors on sales, production, orders that are in the pipeline, economic conditions. We also know what the current conditions are. Many of you who are accountants, you do the month-end close, so you report profit and loss, balance sheets, income statements, net cash flow. And you also have some sort of future prediction capability. It may not be sophisticated partial differential equations, but it can be using things like driver-based rolling financial forecasts and the like. So the models will help plan our weekend. Can we have a picnic with good weather, but also help plan our business strategy. I also want to give you an example like in a bank, how a bank uses analytics. When they're determining the magnitude of a loan to give to a customer, like an automobile loan or mortgage for their house, they will start by looking at all the historical information of all the loans they've made. That's the borrower data, the income of the borrower, what's their payment history, their current debt, their work history, their age, where they live, all of that. And then they basically will then plug in those same parameters for the new loan applicant, put it into that model, hit calculate, and it will come up with a credit score, How credit worthy is this loan applicant? How much money should we loan them? What should be the conditions for the loan? And the reason I have the plan, do, PDCA cycle, that's plan, do, check, act, because if a loan applicant that we give that money to basically defaults on the loan, well, then we've got new information. We need to update our model because this was a surprise. We thought that loan applicant would be credit worthy and they were not. So what pressures have caused interest in business analytics? Well, let's start with just the complexity and variables are replacing gut feel. You can't just rely on intuition when you're making decisions. There's just exponential growth in data, users, and searches. Plus, we've got volatility, uncertainty, risk, clock speed. Clock speed is my sort of term that, increasingly decisions need to be made almost in near real time, if not in real time. Sometimes employees are on the phone, go or no go, yes or no. They have to make a decision in real time. They really hope that, boy, I wish I could go basically to one of our systems, hit calculate and see how I should make that decision. Standardized processes, for example, enterprise resource planning, ERP, our CRM systems. When every competitor in an industry, and I'm familiar in India, Reliance as an example, one of your large manufacturers, when Reliance and all of their competitors, all the other competitors, including you, have a enterprise resource planning system, like from the vendors like SAP or Infor or Oracle, then what's your competitive edge now? You've got to use analytics because everybody's already got the same powerful tool. And then the intuition of the potential value of unused structured and text data. Not all analytics are, ones and zeros. Not all analytics are racked and stacked numbers. They can actually put text information. It can actually read text, even verbal text. Candidly, right now, as I am speaking more slowly, a computer software could be converting what I am saying into text and into any language. And just the enormous IT processing power. The astronauts in the United States on the Apollo missions to the moon had less computer power than what's in the mobile phone that's probably in your hand or sitting next to your desk. So, analytic software tools and skills. Today, there are software tools available to increase analytics, capability, and maturity in a modern business, with an emphasis on data technology, but skills are also required. And now I'm going to be talking to you, listening to me, about you and your skills. Why? Because however, software on its own is not the full answer. Good analytics software requires two things: analytics talent and quality data. So the amount of experience that analysts have using analytics software is not what makes them good analysts. It is the amount of experience they have deriving insights from data, understanding a business area, and communicating results. This is a big opportunity for the accounting and finance community, those of you who will be taking the IIM Lucknow courses. So I'll conclude, many organizations think that connecting drill down or visualization software to a database and then creating a pie chart or a histogram is business intelligence. It's not. That's just reporting, okay? Business analytics is where you get the insights. So some examples of business analytics. Well, here's a big, long laundry list. I'm not going to go through all of it. I'll just start at the top. Retail sales and merchandising analytics. When a department store has a slow-moving item that hasn't sold for months, they'll move it to the basement. They'll do a markdown pricing. Financial services and analytics, risk and loan credit scoring. I already gave you the example of the bank. Pharmaceutical analytics, drug development, and clinical trials. Geez, with the COVID, all of the drug clinical trials. Let me move down. Supply chain and transportation analytics, route optimization. What's the best route to have the lowest cost? You get the idea. But now I just want to give you a couple examples. What about business analytics for the finance and accounting function? And I do want to share with you, though, that the accounting and finance function is many years behind the application of advanced analytics than like marketing functions, supply chain functions. They're many years ahead of us, but that does not mean we cannot catch up. We can catch up to them. Also, in defense of us, the supply chain people and the marketing people have much more information than we as accountants have. I mean, as an example, a retail merchandiser may have a customer master file with thousands of customers, millions of customers. What's their age? Where do they live? What's their income? What did they buy in the past? How much did they buy? What was the price that they buy? So they're mining that. They're investigating that. What do we have as accountants? General ledger, payables, payroll, invoicing, not as robust as the others. But let's go ahead and look at some examples. And I'm going to give one example, but if you want to see 4 or 5 more, if you go to the link that you see here, and I think you're going to be given the PDF by the Miles Education people. It's an article I wrote when I was the 3-year term as the executive residence for the Institute of Management Accountants. And some of you listening to me do have a CMA from the Institute of Management. Some of you may have a CPA from the AICPA and CMA, but they're moving in the same direction, of all of this. So the title of the article you can see is Mining the Past to See the Future. Let me give you one example that's in the article. It's about the balanced scorecard and KPIs. I need to first take about a few minutes to give you some background so you can see how the advanced analytics work. Real quick. Professor Robert Kaplan and Dr. David Norton created the balanced scorecard. It was really about for strategy management. What they were recognizing is executives were overreacting to financial results reported at the end of the period. They said, you need to shift your attention to non-financial metrics and measures collected during the period and react to them. And then they also started this with the strategy map, which is really more important than the balanced scorecard. The balanced scorecard's just a feedback mechanism. Above that is something more important. It's the vision and mission statement. That must come from the executives. That's their job. They need to answer the question, where do we want to go? Set direction for the organization. But what the strategy map and scorecards answer is a different question. How will we get there? What are the projects or initiatives to accomplish strategic objectives to accomplish the strategy? So real quickly, here's a fictitious example of a strategy map. Typically has 2 to 3 or 4 strategic objectives. It has a flow from bottom to top. These are the 4 perspectives that Kaplan and Norton created. You start at the bottom with learning and growth, innovation objectives. If you're accomplishing those, they'll contribute to internal process improvement objectives. If you're accomplishing those, they'll contribute upward to customer loyalty, retention, growth, and then all the way to the top to the financial objectives. Each of those arrows, those are key performance indicators, measures. You get what you measure. If you can't measure it, you can't manage it. If you can't manage it, you can't improve it. So to summarize what the strategy map is, we start at the bottom as a learning environment will stimulate process excellence. That'll lead to customer intimacy, loyalty, retention. It'll create the financial value for the shareholders and owners. Now, where does analytics fit in? I'm showing you now a screenshot from one of the commercial software vendors of a strategy map. And you can see those arrows are the KPIs. But the question becomes, how do we know if we define the correct KPIs? Well, one way to test the quality of the KPI is correlation analysis. And so notice what I've just put in on the screen. Let's consider that to be an app, just like you have apps on your mobile phone. Well, there's also apps in computer hardware. And this is a correlation app. So let's say we have 24 months, 2 years of historical key performance indicator information. And we do the correlation. Well, what we may discover, and I'll show you, and I had a problem with my PowerPoint graphics. Just imagine that some of the arrows are very thick and some are very thin. Well, if the arrow is really thick, what that is reflecting is high correlation. So that means as the KPI of, let's say, the internal process is moving up and down 50%, then the KPI that it's influencing is also going up maybe 50%. But if the arrow is very narrow, that means, wait a second, this KPI is going up or down and it's having no impact on the KPI above it. Well, then it's not a good KPI. So I'm showing you that correlation analysis, one of those tools in the tool set of a data scientist, can actually be used in the financial planning and analysis. Here's another example, the shift from being product-centric to customer-centric. I got to give you some quick background. This is about customer profitability analysis. The only value a company will ever create is the value that comes from its customers, the current customers and the new customers acquired in the future. To remain competitive, one must determine how to keep customers longer, grow them into bigger customers, make them more profitable, and serve them more efficiently, and acquire relatively more profitable customers like the profitable customers you have today. But we have a problem. Most accountants and CFOs are not measuring customer profitability. They're stopping halfway down the P&L. They're stopping at the product gross profit margin line. They're not including distribution channel expenses, marketing expenses, selling expenses, cost of service expenses to create a P&L by each customer. And I'm not going to basically take you through, some of you have already seen that. So this is a reflective of any organization's expense and costing system. It's basically a network. You start with the expenses at the top, you translate them into the work activities and the end-to-end processes in the middle, and then they pile up in the products customers at the bottom. It's basically reassigning costs. Costing is modeling. It's not T accounts and journal entries. And it's typically you use activity-based costing principles to accomplish this. So you notice that some of the activities are going direct to the customers, not to the products. The customers at the bottom are consuming the products. It's kind of like at the bottom, the final cost object is kind of like the predator food chain. You know, large mammals eat small mammals eat plant. Once we do that, look what we get, a profit and loss statement for each customer. And then we can see all of the profit margins that are layer by layer by layer, like on an onion skin. And in this fictitious example, there was a 30% composite gross profit margin for the products, but between the 30 and the 8 at the bottom, 22 more points of profit margin are lost, nothing to do with making or delivering the service, all with distribution and so forth. And if you calculate that for every single customer, you can put them on a grid where each customer is a circle intersection here. And the vertical axis is the product mix gross profit margin, high or low. And then the horizontal axis has to do with how difficult is it to serve this customer. You know, you've got low maintenance customers, easy to serve, and to the far right, high maintenance customers, difficult to serve, always changing schedule, delivery schedule, only buying special, never standard, and so forth. And now the name of the game for marketing and sales is to move the dots from the bottom right to the upper left. In other words, make actions and decisions to make them more profitable. But now, where does analytics fit in? And now I want to warn you that what I'm about to show you is very embryonic, meaning it's an early stage. Not very many companies are doing this. In fact, not very many companies are doing customer profitability, but for the few that are, and they calculate it, they can then take that data, they can rank order their most profitable customer to their least profitable customer and put them into a decile grid. What decile means is 10% increments. So in this example, look to the far left, the top 10% of the most profitable customers are approximately 10 million in the graph. Then the next 10%, that's a histogram to the right, a little bit more than 2 million. Then we get to the far right, the least 10% are actually losing roughly $2 million. So now the question is, what differentiates the most profitable customers from the least profitable customers? Well, we could speculate. Maybe the ones on the left are senior citizens, older people, and the ones to the right are young people. Why? Because the senior citizens have a lot more money. They can spend more. What to the right, the kids don't have much money. We could say the ones to the left are men, way to the right are women, or vice versa. You know, I'm just guessing here. Or we could, or, meaning we could continue to hypothesize what makes the difference. Why don't we throw the computer at it? And the computer, with a technique called recursive partitioning decision trees, can take a look at the top of all those customers. Let's say we had 1 million customers, rank ordered, and it can then say, let me go to the customer master file for all those customers and look at the data that's in there. We may have 100 variables. What did they buy? When did they buy? How much did they buy? Where do they live? What is their age? What university did they go to? And so forth. And recursive partitioning will then kind of like segment them. So in this example, it said, look, the number one differentiator between the high profit and low profit customers happens to be the average order size. And incidentally, this could be in supply chain, trading partners. So the more profitable customers bought a larger order than 10,000, the less customers, less. Once we do that calculation, it repeats it into the second group. What's the next category? What's the next category? So by using recursive partitioning, we basically, we can basically provide insights and information to the marketing and salespeople so they can better understand what actions can we take to basically increase our profitability from our customers. I'm going to be very brief about the disruptive digital revolution, but it should be concerning to you and to me. It's about the impact that artificial intelligence, robotic process automation, and machine learning is going to have on the accounting profession. Let me talk about the digital revolution. The accounting profession needs to prepare itself for substantial change and a threat to jobs in accounting. This is because there is an accelerating and disruptive digital technology transformation in progress. It is referred to as the digital revolution. It can potentially adversely impact an organization's competitiveness, and it will be replacing some employee jobs with computers. And I'm including you as accountants. Now, there are 5 impacts that it's going to have. It starts with transactional processing, things like accounts payable processing, invoicing processing, payroll processing. What artificial intelligence software will do is it will actually watch a payroll clerk or a payable clerk key in all of the transactions. It's memorizing them. And after a while, it'll say, move aside, clerk. I don't need you. I'm a computer. I watch what you did. I can do what you just did. Another example, period end count closing. We go through the manual journal entries. I was a division controller at age 27, so I know what that job's all about. And then the computer can basically see all of those transactions. And so 5 minutes after the end of the fiscal period, hit calculate and produce the period end close, not a week. Number 3, the effect on auditing. And if any of you listening to me are from a CPA firm, really listen up. The computer is going to replace the audit. It's not going to be sampling anymore. It's not going to be the young auditors going to your audit client, spending days and days in their offices. The computer will basically just access your client's database, hit calculate. It's going to see fraud detection, outliers, everything that an audit. And it's not going to be sampling. It's going to be 100%. Number 4, the effect on business process outsourcing, BPO. And those of you from Bangalore that are listening to me, and I've been to Bangalore, I have visited, your companies. I saw that sea of 300 desks. That many of those desks are going to be replaced by a computer. And then finally, number 5, the effect on regulatory filings. In the United States, after you close the books, you have tax filing to do. There is a tool called XBRL. It basically automates it. I know I went through these 5 very quickly. If you want to read in depth, the 2 links at the bottom are articles that I covered on all of this. Also, there's not enough time to watch a video, but if you go to YouTube and just search for humans need not apply, I think it has over 10 million views. It's pretty scary. You're going to see the impact of artificial intelligence, robotic process automation, machine learning will have on the universe. So Varun, I'm almost done here. Let me conclude. What are the benefits from applying business analytics? Well, you're going to get a higher return on investment from just leveraging all the automation. Deeper actionable insights and understanding from what you can see. It'll reduce uncertainty and manage risk much more effectively, and more intelligent and systematically tested decisions. It's really a bridge to a culture of analytics and optimization. So I'll conclude about the integration of data, data science, and technology. Accounting professionals should fully embrace the integration of data, data science, and technology. They should partner with experts because it will have a transformational impact on future operating models and decisions. The limits or barriers on information flow are beginning to crumble. Those who prepare for this change will be at the forefront of accelerating value creation across an enterprise, and accountants are well positioned to drive this evolution as thought leaders. So I will conclude action steps: get educated. You're doing that now. Thank you very much by attending Varun and my webinar. Get buy-in. Do not underestimate the magnitude of resistance to change by managers. They like the status quo. Also they don't want to be measured. They don't want to be held accountable. They don't want others to know the truth. So you're going to have to behave like a change management sociologist or psychologist. And how many of you have degrees in sociology and psychology? None. We're all Newtonians, like Isaac Newton. To us, the world's a big machine. Give us the levers, pulleys, dials. We like quantitative. You're going to need to be a little bit like, Darwin, Charles Darwin, Darwinian, sense and respond to overcome. There are techniques that I'll be talking about when I do my IIM Lucknow session, rapid prototyping. Actually implement an ABC system in 2 to 3 weeks, not 6 months. How to build a strategy map and balanced scorecard in 2 days. And below in the resources are 4 links to articles that you can read. So from theory to practice, your success depends on how fast the right information gets to the right people. There is my email address, because there may not be time to answer questions during the session with Varun and I. You can directly email me, and also feel free to invite me to connect in LinkedIn. But just put the message in the optional, I listened to you and Varun's website. So I'm going to stop sharing. And now Varun and I are going to have a little talk. Oh, you're muted. Varun, you're muted.
Yep. Okay. Thank you so much, Gary. This was real amazing. I think you went at 200 miles an hour, but and at 30,000 feet. So this was really nice. So thank you so much for an amazing session as always. So guys, for those who have come to the session, the agenda of the session is to give you a trailer of digital finance transformation. Of course, in an hour or rather less than that, you really can't sort of get into details, but I think at a high level, everybody sort of understands. Let me put it this way: all of us are part of business transformations that is happening across businesses, across industry. So not just finance. I'd say every business function is transforming, right? Marketing is transforming. Think about it, right? Let's say you have a marketeer, who's very good in putting hoardings and distributing leaflets, doesn't understand online, doesn't understand Google Analytics, or doesn't understand online advertising, doesn't understand YouTube or Insta. That person is obsolete, right? So the marketing function is evolving. HR is evolving, right? How do you attract talent? How do you retain talent? Let's say if you were to use analytics in HR, you can actually predict, okay, hey, you got this company with 800 employees, and these 47 of them are most likely to leave in the next 6 months or next 3 months, right? So again, you build up HR analytics models. Supply chain, again, supply chain is transforming with data, with analytics. So every business function is transforming, and so is finance. And the good thing about the finance function is, right, we already have a lot of data on us, of course, and the good thing is a lot of our data is very structured, right? It's all there, and we it's there on accounting information systems, on Excels, but how do we sort of complement that with data from a lot of other sources? Even I give a lot of examples when I talk about analytics. As a matter of fact, Gary, if you're aware, even when you look at professional qualifications like CPA, CMA, it's headed the analytics way, right? On the CMA exam, there's an entire section on technology and analytics. On CPA, again, 2024, the evolution of CPA, they are trying to get a lot into tech, but of course, with professional qualifications, the agenda is to help build a mindset, not really get hands-on, right? Let's say neither the CPA nor the CMA nor any of the professional qualification really gets you hands-on on, let's say, how do I use, let's say, a Microsoft Power BI to build up an amazing dashboard, which I can present to my CFO, which I can present to my business, right? How do I really start thinking in terms of, let's say, one of my business units is not doing well. Not only do I look at the past data, the last 5 years, how the business unit has been doing or what's the trend. I also, let's say, talk to my customer service guys and look at the email escalations that they're getting from my clients. I talk to my quality people and look at, okay, hey, what are the quality issues that we've been having? Go to Twitter and look at tweets about your product. Look at how your customers are posting on Instagram, right? So you're going to have many sources of data, and how do you put all of that together to drive decision making? So again, the agenda, of course, is perspective, but on top of that, how do you also get hands-on to really drive this? So guys, I'm going to have a bunch of polls. So I have a very small presentation, about 10 minutes. But before that, I'm going to have a bunch of polls, to sort of get a view of the class. So I think the first poll is, around, okay, hey, how many years of work experience, do you guys have? So that you sort of have a understanding of the audience that we have today. And you guys have been really patient and nice. I mean, and I think Gary, as always, the audience seems very mesmerized. I mean, we had a very steady audience number. I mean, no dropouts, and everybody's been like quiet and listening. I mean, they really put those seat belts on that you advised them early on. So I'm going to close the poll now. So let's see. Okay, so very interesting. We have a pretty diversified audience. About 30% more than 10 years experience, about 30% 3 to 10 years experience, and then 40% less than 3 years. So great. So I think we've got quite a lot of experience in the class. Now let me sort of get more specific in terms of how many of you guys have been a part of a finance or a business transformation project in your company. And this is very normal, right? Every company is trying to evolve, trying to change things from the old to new. So let me launch the poll. So here we go. So have you been a part of a finance transformation or a business transformation project, in your organization? Or have you at least witnessed, you may not have been part of the project team really driving it, but you've been an onlooker in terms of, okay, hey, what's happening? Okay, there are robots coming inside the company. I mean, and typically, right, when you talk about robots, people tend to think of physical robots, the big ones, coming in. These are, all the robots are not those big ones. There are a lot of them are bots, which are actually on your system, right? I mean, you no longer need, let's say, somebody, let's say, and Gary, you've been to a lot of these companies in India. Let's say there are a huge number of people for P2P, procure to pay, right? From the time I place an order to a supplier to the time I pay the supplier. Now, do we really need human beings to do that three-way match, right? Trying to look at the vendor invoice and the receiving report and the PO which was sent to the vendor and do a three-way match manually. I mean, how about we have a bot which does the three-way match? Let's say there's an invoice coming in from the vendor. The bot will extract it from the email ID. The bot would do a three-way match. Everything is fine. The bot will log into SAP and enter that invoice details. And unless there's an exception report would get created. Many exceptions can be dealt by bots, or there could be a human intervention which is required, depending on the maturity of your automation. But the point is, right, it's all about automating those. See, any task that you do in finance and accounting. So and Gary spoke about this. If the task that you're doing in finance and accounting is repetitive, you're doing the same thing again and again and again, that job's going away. When is the question? It could go away tomorrow, in a few months, in a few years, but you're going to have the transformation guys coming and looking for you because your job needs to go away because it can be automated, right? And that is where the finance professionals need to understand how do you transform the finance function, the business function, as well as use data, use technology, leverage that across the finance and accounting ecosystem. So I think this is very interesting. So we have about 30% of the class, 29%, who've actively participated in a finance transformation project, and about 15% who've sort of been a witness, not really been hands-on with that, but they know something's happening. They know jobs are going, or things are getting better, things are getting more efficient, right? I mean, I'm not saying companies will not need finance people. I mean, companies will still need finance people, but not just do those repetitive jobs. But let's say, you still need finance people to talk about what's going to happen tomorrow, to talk about what's the direction the organization needs to drive in, what should be the strategy for the organization, right? So, you need finance people to be a business partner, a strategic business partner to the CEO. So this is pretty interesting. And then we have 33% saying that, okay, hey, haven't done it, but really looking forward to it. Very nice, very nice. Okay, now and I'm going to have you another interesting question. So what we've done is, right, so as Miles, we do a lot of work on professional qualifications, and they matter a lot in finance and accounting, right? You could be a chartered accountant in India, very credible, a lot of respect for chartered accountants. You could be let's say a CPA or a CMA, which are US qualification. The moment you have a professional qualification, you really stand apart, right? But the professional qualification basically it sort of complements university. It's on top of university education, but of course getting you ready for the functional roles. Now, what we've done is, we've gone a step ahead now. So we're saying professional qualifications are good. They help you get a step in the door. But we worked with a top IIM Lucknow, and worked with them to create a program on digital finance transformation. Now, this is a very unique program. You have no such programs. I mean, we've done a lot of market research. There are no such programs, none. No such programs in the country. Even globally, there are only a very handful, very few select programs, but none of them as comprehensive as we've done it. Now, there are a lot of programs, however, right? So there are a few executive programs on, let's say, a business transformation or business and data analytics, right? So you do have programs there. But one of the challenges, so few finance people are very proactive in terms of using technology and do go for those programs. But think about it, right? If you're a finance and accounting person and you go for a program, let's say the program is on business transformation, and you have a program in a class, let's say a cohort of 60 people, where 59 of them or 58 of them are engineers, right? And you're the only non-tech guy sitting in class, or maybe 50 of them are engineers, right? So again, it's great. It's great to be a part of such a cohort, and if you're able to catch up, nothing like it. But the point is, right, you're going to be the odd man out there, and that is where the finance transformation program that I'm talking about, this is very unique because in this program, this is only for finance people, right, who are looking at building in their careers in finance, or already in finance, and want to understand, okay, how do I leverage technology? How do I leverage data and analytics? So let's see this poll. So we have about 50% of the audience super excited. A few of you like, okay, hey, it's fine, but so what we're trying to do here with this program, right? And I think something we do as Miles for all our programs. So all the programs that we offer at Miles, number one, impart you with relevant skills, right? And this program is really hands-on in terms of the future of finance. Now, on top of that, what are you looking at is credibility, right? So number one, you have skills, and number two, credibility. So skills is finance transformation, which is the most important thing. But the icing on the cake, or a really cool piece here is this is one of the very few programs where you actually get an alumni status from IIM Lucknow. So let me tell you that when you look at top B schools, they do a lot of executive programs. Many of the executive programs are just certificate programs. There are only a handful of programs, very select programs, where they actually award an alumni status. And this is one of those programs. And as I said, there is no such program in the country which is around focused on finance professionals and how do you transform the finance function in business. right? So if I were to move on my slide, why digital finance transformation. So I think Gary's spoken at length about it, the why piece. So I'm going to move on this. The question is, are you ready, right? Technology, data is the new oil, data is the new gold, right? So, are you able to use data? Are you able to use technology in finance? Are you able to use, data and analytics to drive better business decision making? So, we already spoke about impacts. Jobs are changing, right? It says many job roles which are the risk of displacement, and then new job roles will emerge. So the future CFO, the future finance leader, would be, would be a person who combines finance and accounting domain knowledge with technology and analytics. As a matter of fact, I don't know how many of you are aware, a lot of companies, a lot of companies, a lot of finance roles, they actually hire engineers who learn finance or do an MBA in finance. Because sometimes the challenge that you see with finance and accounting, let's say commerce grads or accounting grads, is they're very averse to technology. And so finance teams, they actually hire techies who learn finance, and a lot of CFOs are actually tech graduates, right? So that's happening. So the point is, if you don't up your game, the engineers are coming for you. They're going to learn. If you don't learn technology, they're going to learn finance and take over your roles. So when you talk about this program, the digital finance transformation program, it covers the key pillars of transformation impacting finance functions, strategies across the value chain. A very, very interesting piece on this program. This program would actually help you build a finance transformation blueprint. Now, there could be multiple scenarios. One scenario, you're actually a leader in your organization and you are actually in a position to implement that. Second is, you could be part of the finance function and you go to your leader, you go to your CFO, and show him, okay, hey, this is how we should do, we should be headed with a finance function. And then, and then of course, if your proposal is accepted, naturally, you're going to get a leadership position on that particular project. So again, a lot of case studies, industry practitioners. So as we said, Gary is one of the industry practitioners, thought leaders on the program. Many more, and I'm going to come to that. So this is the certification from IIM Lucknow, peer networking, new age curriculum. So all of that stuff, guys. And of course, see, placements. The advantage is the moment you say you're a finance guy and you understand data and analytics, you're already in an amazing place. And plus, now you also have IIM Lucknow on your resume, on your LinkedIn. So you, become very, very, very credible, and a lot of opportunities, for you. So this program is for finance professional with 3+ years of experience, evolving CFOs, finance leaders. These are the modules. I'm going to spend a minute on that. And I think a lot of these modules are actually what Gary already discussed, right? So it starts with the big picture, the changing CFO strategy and the need for transformation, the key drivers for finance transformation, FP&A or financial planning and analysis transformation, transforming operating models, O2C is order to cash, P2P is procure to pay. How do you leverage data analytics and data visualization from reporting to insights? So Gary spoke about BI versus BA, right? Business intelligence versus business analytics, right? And then you have module 7, corporate finance in the digital age. Module 8 is around internal controls, enterprise risk management. And in these pieces, right, with technology, the kind of internal controls that you need to have over technology are very, very different from what you traditionally needed. Leveraging cybersecurity, right? We said data is very, very valuable, but you don't want cyber attackers to impact you. Fintech, digital financial services. Module 11 is my favorite, where you actually build a blueprint for finance transformation. And module 12 is about, how do you be a change agent? Again, as I said, you may already be in a leadership position, or you may be a part of the finance team where you put this proposal, to your CFO, to your CEO, and say, okay, hey, these are the things that you think should improve in the organization, or how the finance function could contribute much, much better than it is. Right. So again, you can go through all of this. So the program, guys, is a program which is spread over 9 months. You only going to have classes on Sundays. So they're going to be 3 hours of classes every Sunday. But the amazing part here is at the beginning of the program and at the end of the program, you're going to spend about 5 days on the Lucknow campus. right? So 5 days of campus immersions, and over the 9 months, you're going to have 3 hours of classes every week. So it's been amazingly designed, and a lot of the classes, right, will be, of course, about half your classes will be by Lucknow professors. I'm going to show a couple of them. So career assistance and all is there. This is your program. So Dr. Vineet Chauhan, he's an expert. He's worked in at senior positions with a lot of global banks. He was previously a CFO. Dr. Soumya and a few of the professors from Lucknow would be involved. And then Gary is one of the lead professors of practice. You've heard him. He'll be taking a few sessions. We have Shashank Panda. We have David Axon, Dr. Rev Lawson. I'd be doing a few sessions. We have the CFO of Swiggy, CFO of Policy Bazaar, Dr. Prashant, who's an amazing data science person. Shikha, who's again, a CFO. She's currently a managing director at Vistra Group. So again, really, and there are a lot of other thought leaders and practitioners who are going to be coming in. So it's sort of an amazing blend of, the best professors from IIM Lucknow and industry practitioners who are going to sort of get you ready, for the future of finance. Now, this is a 9-month program, a total of 130 hours of learning. So that's 130 hours is the class time over and above your self-practice and all of that. It's about, the program is about 2 lakh rupees. Schedule. You're going to have every Sunday class 10 a.m. to 1 p.m. And then there is campus immersion for 5 days, 3 days in the beginning and 2 days at the end. So you have a peer-to-peer networking, and it's really an amazing experience without compromising your job, right? You're in a full-time job, and along with that, you're able to achieve this. And you're gonna get a few foundation courses, about 20 hours of pre-course modules before you start with the program. So this is about IIM Lucknow, about Miles. I'm going to move on. So this is the email ID. If you're interested in the program, exec@support@mileseducation.com. Shamanta or Neha, if you could sort of put the contact details of Ranjita or Padmini for people to get in touch with if they want to get in touch. So guys, again, open for questions now. Any questions that you have, feel free to raise your hand. I'm happy to get you online, or put your questions on the Q&A box. This program, guys, let me do a poll on this. This program is starting in, I think the announced batch start date is 24th August. The first application deadline, the program got launched only this month. The first application deadline is, I think it's in July 25th, 2020. It's actually 2022. But the application deadline is in about 5 days. If this is of excitement to you, this is really great and very unique. And this is the first cohort. But of course, that's the most exciting part. And this could really be a game changer from both a skill as well as a credibility standpoint, for all of you. So guys, happy to open up for questions now. Let's see. I'm going to lower all hands right now. So guys, if you have a question now, I request you to raise your hand, not physically click on that raise hand button, and I'm going to call out your name, and feel free to ask your questions to Gary or to myself. If you want to talk about finance transformation in general, I think Gary would have some amazing responses for you. If you want information about the program, I could help you. Padmini, the message that you have sent is to hosts and panelists. If you can send the message to 1 second, everyone, that'll be nice. Okay. Okay, so let's see. We have a question from Ayan Banerjee. Hi, Ayan.
Hi, Varun. So just a quick question. I have about 20 years of experience in finance, accounting, FP&A, pricing. How does this course help me? And I don't have any exposure to digital transformation.
So see, the point is, right, this is something which is the future. This is not something which I mean, of course, it's been happening in the recent past and in the present, but this is basically the future, right? If you haven't had any experience, you're sure to get some experience in this, or you could be a change agent to drive digital transformation in your current or in your future organization. So the point is, this program is more forward looking, and I think this could be a very, very good learning experience for you. See, again, what I'll say is, it's not that in 130 hours after this program you're going to become an expert in finance transformation.
Correct.
You're not.
Yes.
But I think you will you will get started on that path where, whenever you look at, let's say you may have a finance team which is doing a lot of manual repetitive tasks. The moment you attend this program, the first thing is you would want to eliminate that. I'm just giving you an example. I'm not saying, it'll be done in a day. But the point is, right, it'll sort of put you that perspective, right? Sometimes when you go on meetings, right, you would see a lot of people talking just stories based on their gut or intuition. And you would ask them, okay, hey, give me data around what you're saying. The marketing team says, okay, hey, I want to spend, 3 crores in that ad budget. You say, okay, great. Give me data. Okay, what are you going to achieve? How do you think this is going to help? Right? So you're going to become more a data person, and you yourself, when you are presenting, the direction the business should go, you yourself would have that entire perspective of, analyzing data, presenting the data and dashboards. So this could impact you in multiple ways, Ian. But what I can assure you, and this is something I've been really excited about. It's taken us over a year to get this program in place. Trust me, over a year. We've spoken to, I think about 40 to 50 thought leaders, industry experts, practitioners, had a lot of discussions. And, Lucknow was really, really involved with us in the entire piece. And this is something which I've been looking forward to. I hope I was able to answer your question, Ian.
Yeah, thanks, Varun.
Gary, you want to add anything to this?
Well, he mentioned about pricing. Part of the course is going to be really about profitability analysis, and there's many levers. There's, target costing, activity-based costing, so you can actually see where you make money, where you lose money. So, I appreciate what he said he's been doing in the past, but you can always, if you will, lift yourself up one stage higher.
Sure, Gary. Thanks.
Okay, let's see. Another question quickly from Shalini Tiwari. Hi, Shalini.
Hi, Varun.
Hi.
See, I'm a banking professional from last 13 years, and I don't have exactly any exposure towards this digital thing and all. And I'm trying to do this CPA also, but I'm not what you call a finance graduate. I did MBA in finance. So whether it will be helpful for me, or whether I'll be able to do it or not, how it will be.
So again, Shalini, my response to you is banking is going through a lot of disruption, right? You see all these, fintech startups. You see how banking is getting has already gotten digitized. But I think banks are in an amazing place for a lot of customer analytics, a lot of analytics around. Okay, let's say you may have a few 100,000 or millions of customers. And you should be able to predict, okay, who needs a home loan, and who needs a credit card, and what not. So again, so that's typically a lot of customer analytics. Even in terms of your business, your data, I think every business sector, BFSI being one of them, is going through transformation, is trying to use data and analytics. I think everybody's on the way. So if you haven't been a part of any of the finance transformation teams or digital transformation teams, you should look forward to as part of your career progression. And see, CPA is great. It's a professional qualification, and so professional qualifications in finance really are very valuable. So that's great. But this program basically starts where CPA stops, right? So CPA would give you a lot of insight into how do you do your accounting and reporting, like how do you do your audit, about tax, about finance, right? So CPA is going to get your basics sorted. It'll complement what you learned in college. but finance transformation, this program is very, very hands-on, right? So this will cover tools like, analytics in Excel, Power BI, and it's not just about tools. See, tools you can learn on your own as well. It's about, how do you use the tools to help your business take the right decisions.
Yeah.
So Shalini, I mean, the point is, this is a very exciting program, and this could reap in great investment. And as I told you, this is the first of its kind in the country, and one of the first in the world. So very, very unique, and something very meaningful. Gary, if you want to talk about how banking, data analytics in banking.
You're asking me?
Yeah, Gary. Yeah.
Oh, well, one of the powerful tools is customer lifetime value, because to use, it's almost like treating customers as an investment. And, customers go through life cycles. Young girls become teenagers, teenagers become moms, moms become, mothers, become grandmothers. As they go through those stages, they're going to purchase things in different ways. So the most sophisticated banks, actually, it's all like discounted cash flow. They're like saying, return on customer. Where is we going to get the highest dollar or euro or whatever is your currency next to get a higher return? So in banks, customer lifetime value is one of the things I'll be talking about during my sessions.
Okay, so I see a couple of questions around the cost of the program. Guys, the cost of the program is about 1,96,000 change. Let's say about 2 lakh plus GST. And just get in touch with Padmini and team. There are EMI options. You can spread it over 12 months. So you pay what $20,000 per month over 12 months. So again, see the point here is this program is brings about a lot of credibility, especially given the fact that it awards you an alumni status from IIM Lucknow. So that's why it becomes a big deal. And again, because it's a full program. So that's where you have that fee point. Okay, let me see one more question, and we'll then call it a day. So let's say Azhar is one. Hi Azhar, I see many more hands. Let's see how many we can take it. We'll go fast. Azhar, hi. Azhar, you need to unmute.
Yes.
Hi.
Good evening, Varun sir.
Hi, good evening. Hi.
So my question is that a course for let's say CMA fresher, because I have just given my I'm just CMA fresher. I won't have any work experience. And the second thing is that how it will help me in my growth and promotion once I start doing job.
So Azhar, I think get in touch with their team. My understanding is, we can, you need to put your SOPs together and send it to Lucknow if they would accept your candidature as an exception. But typically, we're looking at more than 3 years of experience on this program. But get in touch with the team. It doesn't harm sending in your application, because you send your application only when it is accepted. So guys, for everyone, people need to apply for this program only when your application is accepted by Lucknow. Would you have to pay anything or pay the fees or whatever it is? So Azhar, put up a good story in terms of how you're a CMA, how you sort of are excited about technology and analytics, and let's hope the Lucknow admissions team accepts your application.
Okay, sir. Thank you.
Cheers. Okay, Malika Pati. Hi, Malika.
Hi, Varun sir, and hi, Gary. So my question is, earlier I had a couple of years of non-technical experience, and then I recently completed my CPA, and with a lot of excitement, I have joined Deloitte Audit. So how exactly is right time for me to join this course now, or should I wait and get some experience in audit and then go for this course? I'm a little confused if I have to join now, or should I wait for little audit experience and then take this course?
Malika, I think that's a call that you'll need to take. But what I'll tell you is, even when you look at audit, right, a lot of audit data analytics at play today. Gary spoke about it during his session. Is like, audit sampling, those days are gone, right? You're testing the entire population with the use of technology. So again, today analytics is across the board, including the audit function. The clients that you're auditing, they've gone through transformation, right? So you need to test their internal controls, which is all around technology. So the point is, I would not say that you have to do it now, but I think this is a good time for you to get started. That you're already a CPA, you have an amazing professional qualification. This would sort of complement that and would put you in a good track, Malika. But I don't have a definitive answer for you whether now or later. But I would say it's better earlier than later. Because the point is, right, you want a steep career progression, and this program would help you further differentiate yourself. With your CPA you already differentiate yourself, but this program would help you further differentiate yourself.
Okay, thank you, sir.
Yes. Okay, let's see. Couple of more questions. Chandra Prakash. Hi, Chandra.
Hi, Varun.
Hi.
I'm a qualified cost accountant, having working experience 13 years in the field of costing and the pricing and the profitability analysis. So how this course will help me in the further career enhancement?
Chandra, I think you're already working in that place. If Gary can talk about this, you've spoken about a few things which Gary loves.
Exactly. Yes, I heard.
Gary, you want to answer this?
Well, my question, I don't want to put you on the spot. Are you doing activity-based costing in your company? Yes or no?
Yes, I do activity-based costing also, and the margin analysis also.
Are you calculating profitability, a profit and loss statement for each customer?
Yeah, the customer and the project also. Yes.
Wow. Okay. Well, then you don't need to take our course. No, I'm kidding. I think there's value to see, even if you're calculating that information now, what do you do with it? How do you connect it, like, to the sales commission of the sales force as an incentive, so their decisions can drive fair shareholder value? So, there's a lot of the seamless integration. Think of all the curriculum is like many gears on a machine or in a Swiss watch. But if the gears are disconnected, it isn't working. This course will connect all of those gears. It'll give you a vision of how it all fits together. You're doing a piece of it, but you're not doing the total piece of it.
Mm-hmm. Okay.
Chandra, see, I'll give you. This is the point is with any of the programs, right? There are two things. Number one is skills, right? So that's really, really important, right? Mindset, skills, very important. On top of that, credibility, right? The moment you say, okay, I'm Lucknow alumni, and I've done this program on digital finance transformation from this B school, that's a lot of credibility on your LinkedIn, on your resume, and all of that as well. So skills, credibility, and sometimes, right, the credibility really helps you get on a fast pace. Like you did a cost accounting, right? It really put you on a path of success. So I think this is going to be a further catalyst in your career growth.
Okay, thank you.
Cheers, Chandra. Okay. And let's see, we have Reju Chaudhary. Hi, Reju.
Hello.
Hi, Reju. Hi.
Hi, Varun, sir.
Hi.
So, sir, actually, I'm working in audit from last 6 years. So I've listened to this entire presentation. I'm very excited to take up the course, but there are a few things which I wanted to know. Firstly, is it only for the people who are connected to Miles, or other than the people who are not connected to Miles can also take the course?
You're going to come again, Reju? Connected to?
Like the people who are with Miles and in taking classes from Miles, or other than the people who are not.
No, this is okay. So, Reju, this is an open program. I mean, there is no correlation. I mean, of course, a lot of our alumni are excited about this CPA CMA alumni, but this is an IIM Lucknow program. So I would say we are the partners in IIM Lucknow in putting this together. Rather, this was our proposal to Lucknow, and the professors got really excited. Gary came in, multiple other industry folks came in, and everybody put in. And as I told you, it took about a year to design this program and get it to launch. But this is for everyone.
Right. And secondly, is it right time to take the course? Because I have just recently started my CPA, so I was planning that if I could finish my CPA and then go into the course.
I agree, Reju. I agree. So I think that's a call that you need to take. Doing 2 boards at a time, I'm not very sure. But if you decide, let's say you want to push your CPA, do this first and then get back to your CPA, that's a possibility. Or alternatively, complete your CPA and then come back. And I agree with you, because CPA is going to be a pretty intensive course.
Right. And lastly, as you mentioned, the classes, the first out of the 5, the first 3 will be in campus and last 2 will be in campus. So
Absolutely.
is there an option that we could take entire offline or entire online class, like the entire course in the campus itself?
So Reju, the reason why it's not done, right? If you understand, this program is targeted at working professionals, right? So that's the reason why the online thing adds a lot of flexibility. At the same, so it's more like a hybrid learning or blended learning, right? Where you have few classes on the campus and few classes online. So that's the agenda. The second piece is, right, if the session, let's say 130 hours, you can deliver in 20 days. If you do 20 days back to back, what happens is, a lot of people lose the momentum, right? They learned it and they forgot it, right? Because this is spread over 9 months. So what this allows you to is start working internally with your company, with your clients, and see, how finance transformation could, how you could leverage the learnings that you're having from the class. So that is why we have a blended mode. And if we had too many trips to Lucknow, then it sort of gets inconvenient for people as well, right? So to travel multiple times over. So that's why one trip in the beginning, where you get started, you meet the class, you meet the professors, all of that, and then online, and then towards the end, you go in there, again, meet everybody again, graduate from the program, collect your certificate, become an alumni, and celebrate.
Yeah, I totally agree. But I feel the meat is little less, sir.
Okay, fair enough. But the point is, Reju, this is basically coming from experts, from practitioners, and designed as per that. So, and I'm not saying there could not be any scope for improvement, but I think this has been very, very well thought of in multiple levels of iteration. So.
Right. And lastly, I just wanted to know, so that as IIMs are famous for their MBA programs, and at the end they also provide some placement. So after this program, will there be any job recruitment or placement will be given for the people who have completed this course?
So the point is, see, when you look at executive programs, most of the candidates are already working professionals. So the placements do not happen in the way they happen for an MBA program, right? Where everybody passes, and then, there are campus placements and all of that, because here there are people with varying levels of experience, and a lot of people don't even need jobs. Having said that, this is where Miles comes in. We already worked with more than 220 companies, and we have had a lot of companies, a lot of CFOs, a lot of business leaders asking us for finance and accounting people who are skilled with data and analytics, right? Of course, our placement team is very, very active, and they will support you through your career progression. In many cases, in executive programs, you see people staying back in the same company and seeing a career progression there. There are other cases when people want to switch jobs. And I also know, with our experience with executive programs, a lot of candidates, when they join the program itself, right, and they tell their prospective employer that they've joined the program, some people switch jobs even during the program, saying that, okay, I'm doing this. And of course, every day, even the first 3 days at the Lucknow campus would give you a lot of insight to talk about in interviews. And of course, 9 months would actually teach you a lot of things to do. So, the point is, from a placement assistance perspective, Miles would be supporting you on this.
Right. Thank you, sir.
So I see a question from Prashant. What's the eligibility? The eligibility, the recommendation from IIM Lucknow is more than 3 years of experience. That's the recommendation that we have. Having said that, we've had a couple of applications for people with 1 or 2 years of experience, which is submitted to Lucknow. We have not heard back yet, but let's see. We're trying to influence and tell them, okay, hey, as long as people are headed in the right direction, why not? But on paper it is 3+ years of experience. Okay, then we have a question about tools. I saw a question about tools. So what do we learn? Tableau, Python, and other software. So see, in terms of data analytics and data visualization, so Tableau is a good data visualization tool, and it's a very popular one. But for this program, the professors and the practitioners have gone in for Power BI, Microsoft Power BI. So it sort of complements Excel, right? So if you go to YouTube and search about Power BI, you see a lot of things, and it doesn't really need coding or scripting. It's a pretty interactive tool that you could use, and a lot of finance people actually prefer Power BI because it's sort of a build up on top of Excel. So that's the tool. But I think the techniques, the strategy, and how do you play around with data sets in finance and accounting would be something very interesting you would learn from the program. Any age limit? No age limit. Any exams to take up at the end of the course? So Radhika, there would be continuous assessment throughout the course. There would also be a capstone project that you need to present. So there is going to be a continuous assessment and capstone project. But guys, typically, right, when you look at IIMs or even IITs, it's difficult to get in. Not everybody gets in, right? You submit your application, your statement of purpose. You may or may not be accepted. But once you get in, as long as you're committed, everybody passes, right? So we'd expect most of the class. Again, our prior experience with executive education is more than 90% of the class goes through. There are only a few people who lag behind, who don't attend sessions or don't participate in the assessments or projects, who get left behind. But nearly everyone passes. So what else? Let's say one more question and then we close it. Kumaraswamy ji, hi Kumar. Kumar, you need to unmute. Okay, I'm going to move on. Priyanshi Goyal, hi Priyanshi. Priyanshi, you need to unmute. I see a question on the chats from Saurabh. Will it help practicing CAs or CPAs? Again, if you're a practicing CA or CPA, right, as a practicing person, the most money you make is in consulting, right? So imagine if you were to put in a consulting practice in place to help your, clients, transform their finance function, right? Finance transformation for your clients. And a lot of big four public accounting firms do that. They have huge, CFO advisory teams. They actually have dedicated business transformation teams, which of course, charge a lot of money, but, they're really able to help their clients scale up.
Hello.
Okay, I think Priyanshi is live. Hi, Priyanshi.
Hi, Varun. I am pursuing the CA course, and I'm on the I have to give the last group. So in November. So will it be will I be able to do this course with my CA course, or should I be joining it later?
Priyanshi, these are very difficult questions. So the point is, I think it should be manageable alongside, because, this course, this program does not need your full-time attention. You would say about 3 hours of classes every week, and perhaps about 2 to 3 hours of your self-practice every week. So that's what will be the expectation. So if you think you can manage that alongside CA, go for it. Else, wait it out. So.
Okay. Thank you. Thank you.
Thank you. Cheers. Okay. So guys, thank you so much, everyone. Really, really appreciate all of you joining in this evening. And thank you so much, Gary. Really appreciate your time, your energy. You seem to be getting younger by the day, in terms of your energy levels. So thank you. Thank you so much, Gary. Really, really appreciate it. Thank you. So thanks everyone from the Miles team, guys. Okay, Padmini is live. Padmini, you just want to say hi to everyone and introduce yourself, and then we close it.
Yes. Good evening, everyone. Thanks for taking time, to attend this webinar on a busy weekday, right? So I've dropped in my details here, for enrollments, for any other assistance regarding the program. Me and Ranjita from Miles will coordinate. We are coordinating here. So I'll also drop my email ID also. Anyways, we have exit support also. I'll drop my direct email ID so that you can reach out to us.
Thank you, Padmini. Really appreciate. Cheers. Thanks, Gary. Bye bye. Have a great day, Gary. Thank you,
My
everyone.
pleasure.
Thanks, guys.
Thanks. Take care. Bye bye.
Thank you. Bye.